There we go.
Okay, guys, this is the second bootcamp. Hope we're all excited, and yeah, we are very excited about it. Coming a long time, many questions and people wanting to know more, and seeing that there's a difference in how we trade and how we approach the markets, and with all the 1 minute and different high time frame analyses and all these things. So coming from a long time, we decided to do the bootcamp and to implement, kind of revamp the whole course structure and to give this whole new package for you guys. And this is the first one. And then the second one will be more about entries, risk management, and those type of things. And today I will mostly focus on the high time frame analysis, getting a directional bias. How do we start? What's the process that I follow daily on getting a directional bias? Where am I trading towards? Where am I trading from? How do I look at the market? When do I know this is going to be a difficult week, or when do I know this is going to be an easier week to trade? And also, what is the importance of the things to look out for to know, okay, this week is going to be difficult, so let's wait. And then other times like this week, like for GU, it has been absolutely amazing compared to EU, and you could capitalize on that. And I'm going to show you exactly side-by-side comparisons on GU and EU, why GU was easier this week and EU was more difficult. So those are some of the things that you can look forward to. And yes, Ilya will, you just type your questions in the chat, or you can just raise your hand. Ilya will notify me and say, okay, we have a question, this is the question, and I'll do my best to answer it. Just a side note, this is now the bootcamp, the full bootcamp. In the future, well, not future, but in the next few days, new weeks, the whole course itself, the DW course, will be revamped. All the current content will be deleted as is appropriate. And some of the things that we are explaining now will get more in-depth educational videos. So if you don't understand something completely now, definitely ask questions, make notes, study for yourself, but also remember there will be each like short section educational videos on each topic. I will be doing this, and Ila will be doing this as well. So then we'll have just this one full course with all the bootcamps included. Sounds good? Okay. First of all, day one, thought process, entry, refinements, patterns, and advanced concepts, and so on. Okay, where to begin? So our top-down analysis is there for a reason, and that is our high time frame analysis. So we often hear and we see people talk about top-down analysis, and they talk about the 4-hour, the daily, the weekly, the 4-hour, the daily, but they usually refer to weekly support and resistance levels, weekly trend lines, monthly trend lines, daily support and resistance level, daily head and shoulder patterns, but that's not what we refer to. That's not what I'm talking about at all. When I'm talking about high time frame analysis or weekly analysis, or what's happening on the weekly, I'm specifically looking at liquidity. Where is the liquidity on the weekly? Where is it on the daily? And so on. And this helps us getting that directional bias. So each week we take trades, we take day trades. So obviously it's important to understand the most likely draw on liquidity on the weekly and the daily, because we are trading a weekly candle and we're taking day trades in that week. So if you just think technically about it, that is how our trading is formed each week. So knowing this, where's the liquidity on those days and weeks, this aids us in getting a directional bias. I'm going to be showing you some examples as well. Beginning of the week, we identify our potential point A to point B. Where is price heading and where did it come from? So maybe we react off of a order block on the weekly, so a bullish order block. So we're most probably going to be bullish, going to move higher, especially if we've reacted off of a weekly order block. So that's more or less the idea behind it. Each day we quickly refer to the daily as well, and the most likely drawn liquidity on the daily. And obviously then pro trends, meaning in the direction of the daily or weekly, would be pro trend trades, high probability, and then anything else would be subpar trades or lower probability trades each week. So next up, we'll just, most of this that you'll be seeing now, if you've been with us for some time, you will understand and know all of this, but just a quick recap on liquidity, what to look for and where to find it. So you've often seen on my chart, I have this text box in the right-hand corner on liquidity combinations. And those are areas or combinations of liquidity points that I've assembled for myself that I use as a reference. So first of all, most of us, if you've gone through bootcamp 1 and through the educational stuff, you already know what is an order block, what is in high and low, and what is imbalance. So I'm not going to spend too much time explaining that. That's all in bootcamp number 1. But now we're looking at the combinations of those 3 concepts: at order blocks, previous highs and lows, the order block plus imbalance, order block, imbalance, and previous highs and low, imbalance, just imbalance, imbalance, and the previous high and low, and maybe just the previous high and low. Number 7, previous highs and low are mostly used in reversal, higher time frame reversal patterns. So that's just something to note of as well. And then here on the right hand side, you can see the mouse. This is the probably one of the most important things. This is kind of the hierarchy of liquidity. If you have a range, you have your premium above and your discount below. First of all, you'd look for the imbalance to be respected. If not, then the order block. If not, then the low. And if you just think logically about it, that's the chronological order of how they are shown in the chart usually. But more on that a bit later. But even if we move up towards the upside, we would be looking for the imbalance to react off of first, the order block, and then the high. So those concepts and those areas, we've created then the combinations of those concepts, and you'll see that in the charts now. So now I think we'll just be looking at some examples. Number 1 is just an order block. So this is when you don't have any clear imbalance. As you can see, there's no clear imbalance. There's no clean, clear high and low high in this area. We have accumulation, but the most prominent thing is we have a order block. We don't have a clean leg out. It's moving slowly out of the order block. It's not as impulsive. It does break structure, but it's slower to break structure. Then we have the accumulation and price reaching back into the order block. So that's just the basic, just an order block, and the one that we probably all know most of. Here we have it as well. Maybe it's a little bit imbalance, maybe, but all these weeks already traded back into this candle. We moved up and then tapped into the order block and went off. So this is just the order block, nothing too much about it. Obviously, we have trendline liquidity, and this is all on the 15-minute time frame, and that will then obviously look much different on the 1 minute. We'll explain more on that in the next session, but basically it's important to know that we're just reacting mostly on the higher time frame order block. So that's why I've always also like to know where is the higher time frame order block, because often price will just react off of the top part of the order block, and then you have your 1 minute refined order block all the way down where it originated from, and it completely misses you. So it's just important to keep a note of where is the higher time frame order blocks as well. Second up, we have order block plus previous high and low, where there's not necessarily any imbalance left. So we have our order block. It's basically just the buy to sell or the sell to buy. We've bought up and we sold off, and then we have equal highs or previous highs in that range before we return to the order block. So this is a pattern that most of us are comfortable with and we identify well with. And this is something that we often trade as well. In this case, it's important to note that we don't have any imbalance close to the order block. We might have some imbalance along the way. You can see in this big candle as well, all of that empty space over there. But it's often noted that we don't have clean, super clear imbalance on the charts as well. Also important to note, something to take note of, is that this applies to all time frames. This is not just the 15-minute. This is the 5, the 1, the 4 hour, the daily, the weekly also. So it's important to note that. And remember, previous highs and low does not need to be as is shown here on the 15 minutes, just like very prominent. It can also be a small low, and then price sweeps that low into the order block. The next one is order block and imbalance. So obviously we have previous highs here, but when I'm talking about a previous high, it's something prominent, something that stands out. Like we have spikes up, but it doesn't reach the order block and it pushes down. So it's an obvious high and low. In this case, it's not as obvious. It's accumulation and there are highs, but the main thing that we see here is an order block and we see imbalance, specifically the imbalance. That's a very important aspect of this combination, is where you have the order block and a clean, clear imbalance left behind. And on this side as well, you can see there's no clear high. Probably this could have counted. I would have probably counted this as a previous high as well. But what drew my attention more was the massive amount of imbalance left and the order block. So that is then number 3. Number 4, it's my favorite and the one that I trade the most, is where we have clean order block, super clean previous high and low, and imbalance. So the combination of the two. And this is my go-to setup, and this is the one that I prefer trading every day, every week when I see the opportunity. And I think most of you have recognized this, that this is one of the most biggest liquidity patterns that I show and trade on, where I show in the group, on social media, or wherever. This is one of my favorites, and I think this is one of the most powerful, because you have a combination of all 3 of them: the previous highs and lows, the order block, and the imbalance. Also something to note, I've said this countless times, full body candles, very important to get that full body candle, or as near to as possible a full body candle. Even if you see something like this, you can even see price racks to the body and not the wicks with candles like this as well. So as close to as possible full body candles. Next one, imbalance and previous high low. So this is a characteristic mostly found on GU. So we've talked about this quite some time, where liquidity on GU is often found in imbalances. And this is also important to note the range that we're trading within. So as I've shown on this side, where we have an impulse leg towards the upside, we take that, we see the premium above, the discount below the red line, and we see price reacting off of the imbalance. So now you might ask, how did I know it's going to react off of the discount, off of that imbalance? Well, there's 2 things what my answer would be for that, and how I would know that it's going to be reacting off of that area. First of all, is I need to look at surrounding structure as well as time of day. Time of day is very important. If something like this, if we have an accumulation and we see the drop down at a session opening, then I know, according to my rules, that price is going to respect the first liquidity point in the discount. So now I'm referring back to this slide, the first liquidity point in the discount, which is the imbalance. What we have over here, the first one is the imbalance. Then we obviously have order blocks down here below, but the first liquidity point in the imbalance, in the discount, is the imbalance. So you have to combine a few things with it, and on later slides, in live examples, I'll show you more on that. But in this case, we had an accumulation, price was accumulating. And if you listen to the chart that I shared earlier this week, whenever you see accumulation above or below a liquidity point, i.e. imbalance, order block, previous high low, then you know price is most probably 98% just going to drop into that liquidity point and then react off of it. And we'll look at some examples as well. This side as well, it's not as clean and clear as the one on the right, but again, we have accumulation in this area, creating a previous high. And then what does price do? After the accumulation, it just pumps up into the imbalance, the first point of interest in the premium. Sorry, the 2 hasn't been applied on this chart, but you can see it's above the 50%. It taps into the first point of interest in the premium and then reacts off of it. The nice thing about this is on the 15-minute time frame. So there's more than enough time to get a 1-minute confirmation entry. In this case as well, we had price tap in, go lower, push up, and on that 3rd week, on the 1 minute would have been your entry. But this is not now necessarily about entries. We'll look at it in the next session. Then,
okay, interruption, bro.
Yes.
Ankit, go ahead, bro. You want to speak about it?
Yes. Hey, bro.
Yes.
Just one question. For example, as you say, there is imbalance. So, for example, if this order block didn't hold, so what you look next liquidity point is imbalance. You don't look this order block, right?
No, yes, exactly.
Okay, that's why I missed so many entries. So yeah, I wait for this type of order block. But if you find below the 0.5, there is imbalance. You find that liquidity point to take the confirmation entry, right?
Exactly.
Okay,
Perfect.
thank you so much. Yeah.
100%.
And with time of day, remember what he said. Like,
Yes, yeah, bro. Thank you.
That's very important to apply the time of day, session openings. And the last thing that I'm going to apply, we're going to speak more about it, is the economic calendar news. So if you an exercise that you can do each week, take a week and look ahead and look at all the news events, medium to high impact, and then place on your chart the line at that time of day when the news is going to be. If we see there's a news at this time, or it's a session opening, and there was accumulation of consolidation beforehand, that's another confirmation and confluence stick for us to then take a trade, either aggressive or wait for the confirmation within this area. Okay, the last one is super simple. Just a previous high, we sweep the high, we move towards the downside. And in this case, you might sometimes get a confirmation entry, like for example, in this case, we would have had a confirmation entry with the order block over here as price pushed back into it. We had some imbalance there as well. We could have gotten a confirmation entry. But in this case, there would have been no 15-minute confirmation entry. But remember, in this case, we might have had a 1-minute confirmation entry up there, stop loss above the wick. So remember, this is now just high time frame. So I'm not talking about entry. So hold that questions for the next one. Okay. Everyone's still happy, still clear. We're finishing up with this now.
okay, let me do something now. Relaunch. Yes. There you go, guys. Just a quick one to see, but yeah, basically only Ankit asked question. Okay. Wow, everything is super clear, bro. So far.
Awesome.
Can you see the poll as well, David?
Yes, I see it as well.
Okay, good. Okay, nice. Okay, I'm wrapping it up. There are no questions. Nice.
Good. Okay. Next up, now we'll be looking at the weekly. So where is the liquidity on the weekly? This is probably one of the most important things you should do and keep in the back of your mind. And I know this is going to sound controversial, because why do we need to know what's happening on the weekly if we take trades on the 1 minute? Well, simple answer is not everyone wants to trade on the 1 minute or the 5 minutes or the 50 minutes. Some want to have more a scalping, swing trading type of approach. So this is specifically for those that have a daily job, or they don't want to be in front of the charts the entire day. How do we know where price is heading? And it's important then to look at the weekly, and this will also aid you that's just focused on the 1 minute also to give more probability to your trades. Looking at the weekly, we need to identify where is the current weekly candle likely to trade to. Where is the current weekly candle likely to trade to? So we need to ask ourselves, where did it come from and where is it going? That's just why I use the analogy of point A and point B. You don't have to use it, it's just in my head how I make sense of it. Know this sets up our high, knowing this sets up our higher time frame bias. Not all weeks will be clear, but we try to trade in the direction of the weekly. Not all weeks will be clear. Will be an example for EU this week, and I'll be showing you an example of that compared to GU where it was super clear. And you can see then on the lower time frames, Ilya, you can probably vouch for this. EU was difficult to trade on the lower time frame this week, whereas GU has been much better to trade on the lower time frames this week. Implementing all of the liquidity concepts on the weekly time frame. So all of the liquidity concepts and combinations that we've just shown you, we try to implement those on the weekly time frame as well. This doesn't mean that the current weekly candle will reach that area, but it might be the beginning of a big move or the first weekly candle on its way towards the liquidity areas. So next up, we'll be looking at some examples. So this was GU on the weekly time frame. So very simple. Remember, we look at previous highs, we look at previous highs and lows, we look at imbalance, and we look at order blocks. So this is where last week ended. So just looking at the chart, the 2-year-old can do that, 10-year-old can do this. Where's the next drawn liquidity? Well, we have a previous weekly high there. Well, obviously this small one as well, but the more prominent one is this one over there. And we have this one below. So that's the first thing that we know. We see where is the next drawn liquidity on the weekly. There's no super clear order blocks. There's only highs and lows, and there's no imbalance really close to us. Also, we broke structure towards the downside, body close, and we are in discount. So where do we move from discount to premium? So the one confirmation that we have is that we move from premium to discount on all time frames. So weekly, daily, 4 hour, 1 hour, we move from premium to discount. Next up, we see if we keep that in mind, so which area is more likely to be reached, the one below or the one above? Well, most probably the one above, because that's the one in the premium. And then maybe also the highs above it. But for next weekly candle, we can have the bias for the idea that the next weekly candle, which was now this week, is most probably going to trade to either the downside or the upside. But we know the upside has more probability because it is in the premium. And we also know that we always move from the discount towards the premium. And then obviously this week ended very bullish, and we had lots of opportunities to take longs this week all the way towards the upside. That doesn't mean you don't take shorts or you don't take counter trend trades. It only means that you know the more high likely area for price to reach to would be the highs, and that is then how we can get that direction. So next example on Aussie dollar. So we have previous highs, we have previous lows, and order block. So we can see this black candle. That is probably the last order block, but not as clean an order block because we did not break any structure with this move towards the downside. So I wouldn't count this as an order block. I would see that between this week and that body close, we have imbalance in that candle. So we have a previous high and we have imbalance. So already there we have one of the combinations. We broke structure towards the upside, and we were more or less in discount, maybe just above discount in a little bit of premium, but it's more likely for price to go higher than it is to go lower. If we go lower, we see price moving lower, we know where our targets are below the previous lows. And if it goes higher, we know where our targets are above at the previous high and in this to fill this imbalance. So now on the lower time frames, in my head, I'm already looking more for long opportunities than I'm looking for short opportunities. Just because I believe on the high time frame, we'll most likely make a weekly move that's more towards the upside. And that's then what we did. We had a pullback, created the wick, and then expansion towards the upside, cleaning the liquidity above the highs and filling the imbalance in this order block. Last example on EU of a few weeks ago, we have this big impulse move towards the upside. I don't have all the drawings in, but we have a sweep in here as well. Let me just annotate. We have a liquidity sweep over there. We have a move towards the downside. We broke some structure. We accumulated. Then the last week, the prior week, swept the liquidity above all these highs. So we have a liquidity sweep. Is price then again going to go towards the upside? Or do we have a high chance of going towards the downside? Because towards the downside, we have liquidity, previous lows, and then all of this imbalance in here. So when you're looking at the lower time frames, 4 hour, 1 hour, are you more likely to look for buys or more likely to look for sells? Well, on a trick question, the answer is obviously sells, because we've already reacted. We took all the liquidity above the highs and we ended bearish on that week. It's not to say that we can fill part of this week and maybe end up with a wick and then a move down, but the clearer narrative direction story that we're telling is the price is more prone to go bearish than it is to be bullish. So that means, just in simple words, it means that on the lower time frame, i.e. the 4 minutes, 5 minutes, 15, 1 minute, all those time frames, I'll be more prone to be looking for shorts than I am for longs. And with the projection blocks and the 1 hour analysis, you will see more on that. Next term, we pulled back, made the wick, so there were some buying opportunities, and then we sold off, took all the liquidity above the low, and closed in that imbalance. Okay, any questions on the weekly analysis?
No questions so far in the chat. And guys, I want to excuse myself because I took 20 to 25 slides of examples and the vet has only 6. So he would have done more.
Yes, I was limited.
Yeah, he was definitely limited. But okay, I see no questions, so I think we can proceed. Yeah.
Okay. So the next up, we've done the weekly. Now we're looking at the daily and 4 hour. So the daily and 4 hour for me is more or less in the same category. And we'll be looking at those two together. So just to get, because we're day trading, we're not position trading, holding trades for months and weeks. We're mostly trading days, and some of us might hold trades for 1 or 2 or 3 days, maximum a week, depending on your style, but mostly day trades. We get the scalpers, the hyper scalpers, but mostly day trades. We'll be looking to trade the daily expansion. So each day, the daily range moves in a direction, and our work and our job is to capitalize on that move. Where does price start and where does it end? Doesn't mean that we catch the whole move, but we just need a big portion or whatever you need on that time frame. So how do we do this? How do we note the range that we're currently trading within? Well, we note the highest high and the lowest low. This is our current trading range. And for those guys, I do this every morning, every day in the morning analysis. So this is nothing new. This is just now a recap of that. So this is then our trading range. We look for the next likely draw on liquidity in the direction of a weekly for pro trend trading, as we've said before. And we also note the previous day's highs and lows for the most likely, the most obvious next draw on liquidity. So we always trade from a premium to a discount and from a discount to a premium. So every day you look at the day, you make a line, and you look 20 trading days. You don't know Saturdays and Sundays. So you look at your calendar, you note 20 days, trading days to the left in the past, and in that range, you note where is the highest high, where is the lowest low, and that is then your trading range, and that is then where you apply your premium and discount to, and you get then the way we are currently premium or in discounts. So if we have a move towards the downside, we take note of all the previous days highs and previous days lows. They will be the main target, the next draw on liquidity, point B. So we want to look for a convergence in a manipulation of price that's in the opposite direction than our bias. And at a time that the economic calendar or a session opening suggests an influx in volatility. What does this mean? If we are currently in this area, we are in discount and we're looking to move to premium, and we have a liquidity point on the upside, next previous daily high, we'll be looking to enter along when price makes moves in the opposite direction of where we want to go. So if you've gone through the manipulation course, this is then the manipulation that we've been talking about. When price makes that retracement in the opposite direction of where we are heading to in the higher time frame, we know that that retracement is not a move towards the downside. It's simply a retracement and manipulation for price to go higher. And that is then where we look at the economic calendar and the session openings, where there's an influx in volume, an influx in movement, buying or selling power, and that is then where we want to capitalize on getting in on the move and moving with the trend towards the upside, towards the liquidity on the higher time frames. Just a quick note on premium and discounts. We always, I think most of us know about it. So we look at the discount below the 50% and the premium above the 50%. And we're always moving from the one side to the other side on all time frames and all impulse legs. That is what we're looking for. That's always the thing that gives us our edge as well. Always moving from premium to discount and discount to premium. So we mark out the 20-day swing and most recent leg that broke structure. And so just to recap, we mark out the 20-day swing and we get the high and low, but we also look at the most recent legs that broke structure. You'll understand in a bit. So in this case, sorry, I don't know why it's so blurry, but we have the 20 days look back, we have the high, we have the low over there. So this is our main move towards the downside, our main swing. So we'll be looking for price to eventually return towards the upside, back into a premium market, premium, more expensive price range. But also here we have a high and a low that broke structure. So in this area, we can also look at price and how price is reacting from the premium towards the discount, because often price would react here, move towards the upside, tap something in here, then we're in a premium, then we move back to discount, react off of something here, and then move back towards the, then start to move back towards the upside, because remember, price doesn't move just in one direction. It always moves in waves and then moves sideways. So we might see, that's why it's important to make note of all the swings that broke structure. So if we now create a new swing that breaks this structure, then we can look at this area as the next premium and discount and wait for price to enter the discount market before trading back into the premium, perhaps to an order block. And that is then our higher time frame narrative. Because remember, the higher time frame narrative is always the more important one and the more of the high probability one. So let's just clean this. Okay. So this is another example of where price was in the premium. This is a downside discount. We broke structure towards the downside. We pulled back. We found something reacting off of in the premium. So there was reaction in the premium. So that's why we sold off. But we were still moving towards the upside. So this is just an example of how we look at the premium and the discounts. And this was actually GU this week, and why we anticipate the price to be moving higher, combined with the weekly analysis, because all week, previous weeks, we were in the discount, and then with the weekly analysis of that I showed you just a few slides back, with the weekly aiming for the premium liquidity points, as well as the 20-day look back, also telling the same story. It was so easy to see that GU was bullish this weekend. That's why we saw that massive expansion on Friday and throughout the week.
Questions?
Sorry?
There's a question from Kaval and from Reno. You can go ahead, guys.
Huh? Do you have a question?
Okay.
Dude,
Yeah,
I have a question about the premium and the discount.
Mhm.
For example, if we take GU, GU normally moves very fast, and when you have a direction, maybe buys, we may see several days where we, just buy GU. But with the premium and discount idea, I don't really got it. I mean, I understand what it means, but when we are just moving in one direction, even if I'm in the discount area, when GU is trending very bearish, for example, I would rather look for sells. So how could I identify when I should, watch
Yes.
for buys or sells,
Yes.
This is what.
So the answer to that is you move a time frame up. You look at the higher time frame, the premium and discount. So if, like for instance, GU was so bullish this week, and there were
Exactly.
many times where we might think, okay, we can sell now because we are on a lower time frame leg in the discounts.
Yeah.
Or in the premium, we should be moving down now. But meanwhile, the higher time frame, the weekly, to remember the week, that's why I said in the beginning, the weekly is actually your most important time frame, because that tells us where is price most likely going to be heading to in this week that we're trading within. So we can take retracement trades and take those lower swings, but ultimately if price is just keeping on climbing, you have to remind yourself, go back to the weekly, see where is the premium on the weekly, and remind yourself, okay, price is most probably just going to go back to the premium discount on the weekly. So it's foolish to look for sells now. When it looks like it's in the premium, it should move to a discount on the lower time frames. So you might make that mistake once, get a loss, recalibrate, look at the weekly, see where is price heading to, and then you identify, okay, now I should look for sells. So, and another thing is always looking for the sells or the buys after confirmation. So you want to see price react off of a point of illiquidity points, i.e. the imbalance or block previous high and low. If price reacts off of it and shows us bearishness in that premium market, then we can start looking for sells. We see multiple breaks of structure. We see the entry patterns form, as Ilya will show next time. Then we look for the confirmation to wait for the sells. I hope that makes sense in a bit, but we'll definitely look at more examples, especially like this will be in more detail in the course on the separate section. So it will be covered in more detail.
Thanks a lot, Hewitt. Thank you.
So this, I contemplated if I should keep this in, because it's something that it's something that I just want you to be aware of and to look at. For trading ranges, when we react off of a 4-hour low, you can easy to find your next range as a step lower the first order block in the premium discount. So what I mean by this is, if we have a 4-hour low and we see price react off a 4-hour low, and it is now bullish reacting off of this low on the 4-hour. So we see the low, price reacts off it, and it starts to push now towards the upside. Sorry, that is wrong. We have a low, price sweeps it, and it starts to push up. We can then look for a imbalance or an order block or a previous high in the discount, sorry, in the premium. So there's our 50%. We reacted off of the low. We can then target our range, define our range, first of all towards the imbalance. There's number one, then towards the order block, that's number two, and then to the previous high, which is number three. So what I mean by this is basically that if you react off of a low, you want to see price moving towards the first liquidity point in the premium, which is then imbalance. That is how you frame your trade when you take profits. If you look at the if you frame an order block on the 30-minute time frame, you want to look at the first area of interest, point of interest, liquidity point on the 50 minutes. This could be, I'm just showing now different examples. So this could also be an imbalance. It doesn't need to be an order block. The same with 50-minute and 5-minute. If we reacted off of a 50-minute low, if we swept a 50-minute low, we could potentially look for the imbalance on the 5-minute to take profits at, or an order block on the 5 minutes, or a previous high on the 5 minutes. But if you're unsure of where to take profits, take it at the first liquidity point in the premium, not at the order block or the high. Don't try to aim for the sky, the next high, but secure partials or secure profits at the first one in the next, in the premium or the discounts. And this is one of those concepts that requires a whole different video, because I can spend an hour just discussing and showing examples on this, but we don't have time for that. So this is currently all that I'm going to be speaking about on this trading ranges, but it's basically more of a trade management technique and where to take partials, where to take profits going forward. So you might have some questions on this, but try to keep them after I've showed you the full explanation of it. But if you have, I can maybe answer some. If
Yeah,
not,
Haval has a question actually right now, so maybe we can hear it.
Okay.
I mean, the question is really simple, but is this like different examples of
Yes.
trading ranges?
Yes. So if you're on the 50-minute, you look for the 5 minutes. If you take your main order block from the 5-minute, you target something on the next obvious one on the 3 minutes. So you just always step a time frame down. If you take something from the monthly, you target something on the weekly. From the weekly, daily, 4 hour, and this is more in line with us, 4 hour, 1 hour, 30 minutes, 15 minutes, and so on. Does that make sense?
Okay.
Okay, now the 1H time frame, and this is where it gets most exciting, and this is what we do each day, and where we give our most, where we pay most attention to. And this is what we do each day. We're identifying all the liquidity areas close to current price. So we look at our liquidity combinations and the combinations that we have for liquidity, and then we look at where is price most probably going to be heading to next. So here in this example, we have this line, 6 a.m. line of the new day. We see we broke structure towards the upside. That's a clear intent on being bullish. We perhaps know that the high time frame is bullish as well. And this is also GU. We know that GU is most likely going to trade towards the upside, and we can then anticipate price to move higher. We see price sweeps previous highs. We sweeps the previous highs on the left there as well. But ultimately, all our liquidity areas, they still stay intact. We have the imbalance, the order block, previous high, order block and imbalance, and then with the session opening price, on the New York open, price taps down, taps the order block over there, imbalance on the 15 minutes, which I will show an example later, and we react towards the upside. So this is just a quick example on what we're looking at. We'll be looking at more examples later on on how price reacts off of the 1 hour area. So this is the advice that I would give everyone, is to focus and try to trade off of 1 hour order blocks. if this was New York Open over here, and we see there's an accumulation in this area, we see price created the previous high. So now already we have profile number 4, where we have an order block, we have imbalance, and a previous low. Where it's a perfect setup. When we see this bearish candle, we can have certainty that this is not bearishness. Price isn't going to just go down and kill us all. Price is just tapping into the liquidity points that we marked out with a previous low, imbalance, and an order block. And we combine in the higher time frames with the lower time frames, because in examples that I'll show now, there's the 15-minute imbalance there as well, where we overlap higher time frame liquidity points with lower time frame liquidity points. Now, the most exciting thing of all, the Asian profiles. And I'm quite excited about this because this is very important to me and what I mostly use every day. And I think it's nice to share with you. And I hope you guys can implement it or maybe just take something from it. Because I know a lot of you guys already have a set style and a set way of trading. But if this can be of benefit to you, then I would be very happy. So we have the 2 things that we're looking at. We have one where we are consolidated, the Asian session is consolidated, and the next one is where the Asian session is trending towards the upside or the downside. In this case, we're mostly looking at bullish examples. So we'll be looking at buys mostly and not sell. So just everything that we see here on the bullish side, just remember it's also applicable to bearishness as well. So we're firstly looking at when it's consolidated. So now I'm just going to go through a step-by-step guide on what to do when you see the Asian session consolidated. First of all, you mark out the Asian session. It should be ranging. It should be between 20 and 30 pips or less, but not less than 15 pips. So this is where you make a note in your notebook, not less than 15 pips. We note the previous intraday lows, the previous day's lows, and refined 1H order blocks on the lower time frame. So what this means is we note the previous highs and lows. We note the intraday lows, maybe a previous session lows. Note this as well. Notebook notes, previous session lows. And then we need to be able to align it with the higher time frame analysis. So remember this, where we have our order blocks, our imbalance, we have those marked up. And then we combine it with those. So then we look on the 5 minute, the 3 minute, the 1 minute. You look at your lower time frame liquidity points as well. And you try to see how they overlap. What is the confluences between those two? The next one is projection blocks. For those that don't know about it yet, we'll be looking at it shortly. We'll be looking anything from 0.5 to 2.5. And this is actually a mistake. Sorry, this should be 1, 2, 3. So never mind, I'll explain to you in more detail in a bit. We want to see a drop from around 6 a.m. Remember, this is GMT plus 2. This is how I wrote it up for myself. So this is, I think, UK plus 1. So for UK time, it would be 7 a.m. My time, 6 a.m. GMT plus 2. So you can just convert it to your own time frame. Typing into 1H liquidity. This is mostly an ideal aggressive entry, as we don't always get 1 minute confirmation entries. So I know Johnny asked me about aggressive entries and conservative entries. Mostly with this type of profile, I'm not going to give a percentage, but maybe 60% you need to take an aggressive entry and 40% will provide a confirmation entry, or 30%. What I basically mean by this is the price will often just tap into your order block, tap into your liquidity area, and then move in the opposite direction. And usually this is very important. The high or the low of the day would form between 8 and 10 a.m. So between 8 and 10 a.m., we look for the high or the low of the day to form. If we see the high and low of the day and it's formed and we have bullishness, we just take continuation trades. You just follow the mitigations, just as Ilya will explain later on with the entries. We just follow then the mitigations, follow the order flow, and we take longs towards the upside, targeting previous day high or opposing liquidity points in the premium market. Remember, the ranges that we've spoken about previously, if we're active maybe of a 4-hour one, with this formation, this profile, we'll be targeting a 1H order block imbalance high in the premium market. You don't need to hold it for that long. You can take your 10, 20, 30 pips if you just want to take 10, 20, 30 pips, but that's a general idea. you need to be able to also form your own plan with regards to, because some people want to take 20 pips and that's all they're happy with. Others want to take the whole move the whole day, but just to be safe, always secure profits, secure partials. So this is Ilya's fault. I wanted to include examples, but my slides were finished. So we'll be looking at the charts. And then next up, we have the one that I've mostly traded, and that's been most favorable for me this past 2 weeks. It's when the Asian session is trending. So we mark out the low and the high as soon as price starts to drop. So as soon as price starts to give us a retracement, mark out the high and the low. If this is a retracement trade, then we target the premium of the high time frame leg. I'll explain that in a bit. You want to see the drop from around 8 a.m. GMT plus 2, and the trending, it should be in trending market. The Asian session should be clearly trending. We look for retracement inside the range for the first 5 or 15-minute order block below the 50% mark. You'll see now in the examples. We were looking at the order block of the imbalance below the New York Open price level. And this also often happens when the price already tapped into a higher time frame liquidity point. So we've maybe already reacted off of the 4-hour order block and we're moving towards the upside, and this formation would often then happen as well. We would often then see also the high or low of the day forming between 8 and 10 a.m. And we would target the opposing liquidity points in the premium market and previous days high. Looking at some examples, we have an Asian trending market towards the upside. We note the range, we see the low, we see the high. We note the first order block in the discount. There's the first order block in the discount. We also have our profile. We have imbalance. We have an order block. So that is number, I think, profile number 2, order block and imbalance. We see price tap into it. It's below the New York Open. It's exactly at London Open. And you all know this was Friday. You all know how GU ended up on Friday. All the way, smashed all the previous day's highs and really went to the moon. And that was that profile. Second example, this is a bit more complex, but just to note that we have the Asian session over here marked in green and gray. Let me just get the note, my tool. So we have the Asian session marked, the highs and the lows, and then we can see that price then pulls back, but we don't go below 50%. We stay above 50%. We then trade towards the upside. And then when New York Open, and that this was in the lap over lunch hour, we see price moving down. New York Open, see price pushing down. So now we can still use the Asian range. We can see there's the Asian range below 50%. And we can also take the new leg that was created, and we can see that in this new leg towards the upside below 50% as well. Now, guess what? We have a higher time frame liquidity profile. We have the 1-hour order block. We have a previous low, and we have some imbalance there as well. So again, we have profile 4, order block, imbalance, previous low, and we see price taps into it and then moves towards the upside. So this is all based off of this profile. When prices trend, Asian session is trending towards the upside. We'll be looking at more details in this now in the live chart example. So now the projection blocks. So I've got a lot of questions about it, and I've been trying to hold out until now so that I can explain it to everyone at once and in full detail. So in full detail. You want to see that we use this on the Asian session. So whatever the Asian session is doing between 2 a.m. and 6 a.m., we apply this tool towards that highs and lows to get the projection blocks. And we're talking about the theories behind it as well in a bit. And that is just the tool that I use. I just use a fib tool, and those are the settings for those that want to apply it to the own chart as well. So there's 2 different ways of getting the projections. The first one is, we always use the 15-minute time frame. The first one is taken from the body closes, and the second one is taken from the wicks. So it all depends on the range. If the range is below 15 pips, I take the wicks into consideration. If it's above 15 pips, I use the body closes. And it's always good to have a look at both just to see how they align with each other. And this is how I do it. So you have to play around with it and see what works best for you. and come to the conclusion of whether you'll be using this or not. But next up, we'll be looking at the charts. So we'll be jumping on the charts so we can still see the charts. So I'm going to quickly turn this on. Okay, so we'll be looking at the 15 minutes. 50-minute, the session was trending. So this is also a side note. This is where you take notes, something to note of. When the session is trending, like in the profile that we've shown here, when it's trending, major session is trending with this profile, we would often be looking for price to reach half increments or half percentages, half blocks, so 0.5, 1.5. So just keep that in mind as well. So let's first of all just talk about equal movement. So there's a whole theory in trading that if you have a range that moves sideways, that is your range, and then you have highs and lows. Theory is that if we have a breakout, either towards the upside or the downside, that price will often then do equal movements, have an equal move. So if we have a breakout in this area, you would wait for this now retail concept. So you wait for a pullback, and you would target the highs of that equal movement. So then we have equal movements. We also have the AB equals CD pattern. We have a move from A to B. We have a retracement, and then you're looking for that same move from C to D. In this case, we have this leg should be the same as this leg in length and also in the amount of time that it took to reach that area. Then we also have the theory of head and shoulders pattern, that if you take a head and shoulders pattern, you trade that, you look from the low towards the head, you take that move and you place it on the shoulder, and that is then where you would find your targets. So if you take a trade, you would then target the highs, that high, which is then an equal movement from the head to the shoulder, from the shoulder towards the upside. So those are just some elements and concepts of equal moves on the forex charts and on with trading in general. So now applying the same concepts with the Asian session. If we have an Asian session that moves like this, we can look at the high and the low. We have the lows and the highs, and then we can potentially look at projecting those movements towards the upsides. Let's make it a different color, and towards the downside. So this is usually used to get pinpoint accuracy with the high and low of the day. So if we have accumulation, we want to see the manipulation, and I would like to see price respect one of these areas, or fall in line, or fall in confluence with other characteristics. For example, an order block to the left, or a previous high towards the left, or something like that. So that's just in general the general idea of the projection blocks. So we use then the flip tool to place it on there and get a reading. So we'll be looking backwards. So in this case, we had this was on Friday, we had the low towards the high, we had a pip range of 20 pips, so it's exactly ideal. It was trending towards the upside. That's where we caught this move, the first order block below 50%. And another thing for your notes that you have to make a note of, and don't ask me in the future why did I not say this, because I'm saying it now. Big expansion days, we're looking for 4 projection blocks. We priced it in that. So just want to show you the accuracy for projection blocks. And we see price reverse from there. The next one, we see price consolidating, moving sideways, place the tool, big expansion day, 4 projection blocks. This one, a big expansion day, so we're looking for half increments. So we can note 0.5 and 3.5 as well. And you can see then where they align and start to react, give reaction off. So just to note, this is not the be all end all holy grail of trading. This is only something to be applied with confluence. If there's no confluences with previous liquidity with it, it's useless. You don't apply it, you don't use it. But you'll see now where it does work very well. In this case,
Little question, bro.
yes,
So what qualifies as a big expansion day? So is it like when price starts to move, or how do we determine if it's going to be an expansion day?
if price starts to move and it doesn't stop,
Yeah.
you know, you stop looking for reversals and you wait for it to reach number 4, and then you start to look for reversal trades. So that's just the best explanation I can have for it. So for instance, and also you have to account for the weekly. This is why, again, I'm referring back to the weekly. What is the weekly going to do? The weekly is bullish. So if you have a big expansion, you see at one projection block, there's nothing to the left. There's no reason for price to retrace from or return from that area. Then obviously you're going to wait and see for confirmation. So this is not something where you enter exactly at that level. You can, if you are advanced and you want to trade aggressive like that, you can just put a sell at one projection blocks, but it's something that you need to apply with different concepts of confirmation, order flow change, change of character, change in structure, and then you look for that confirmation interest. So in this case, when I saw the price is pushing up and pushing up, and I know that the weekly is bullish, I'm going to try to sell until we see price really giving us confirmation that we're going to sell. Here we have then price reaching the 4 projection blocks. You see the fake out above it. So you can also use this as a support to the previous high, or you use this as a resistance level. We see price fake about above it. We see price break structure towards the downside, and then giving us that confirmation entry in the imbalance in this case. So if we use this also as an example, there's the tool. First area in the premium is imbalance. So remember what I've spoken about, imbalance on GU. There's then your entry. You can have your stop loss just above the imbalance, and obviously take a winning trade. This you can probably see now, I think is cherry picking, but that is how it happens. So this is how me and Illa, we try to use it. We see price reacting off of it first, see the reaction, get the confirmation, and then look for the entries. Now we know that the chances are that we most probably have now created the high and low of the day, and we can take our trade in a direction. So this was now in New York, or the overlap. But if this happened in the time period between 8 and 10, 11 a.m., then that would have been much better confluence that we see. Okay, we've created the high of the day and we're now moving in the opposite direction, and we can take now look for our trades. So this is just something that you use in conjunction with other things as well. If we then now looked at this one as well, it was moving towards the side, it was ranging. We see price manipulated first towards the upside. We had price actually just pushing towards the upside. There is an order block, it aligns with the 1, so we have an area here, but still it's not necessarily that price is going to respect exactly 0.1, exactly 0.1. That's why you play around. You see, okay, what if we placed it on the wicks? Still, it's not clear and we missed it. So that's just how it is. It's not super clear every single time of the day. But then price moved towards the downside. It was pushing towards the upside. So now we have 0.5. We see price reacted off of it. We use that in accordance, or in what's the right word, in conjunction with other things. We note previous lows to be swept, and whatever liquidity points, areas to the left as well. You apply those things. What you can also do is you can see that here we had an impulse leg that broke structure. The first area below structure, you can see price didn't tap into the 50% yet. Perhaps this will now move down 50%. So now we're creating an area. If we then drop down to the 5 minutes or the 1 minute, we can then start to look for confirmations of entries. But also remember, price isn't predictable completely. So we get an area. So now we have an area to look for longs between those areas, but it doesn't necessarily mean that we're going to get a confirmation entry. So ideal, you would want to see price react, pull back towards the order block, and then see the continuation. But we just didn't give that, so that would have been just a missed entry if you were not taking aggressive trades. So again, this is just high time frame analysis. We're not looking at entries specifically in this section. So let's move on a bit. I'm just going to get all our price action back because I want to show you something else as well. Over there. And something to note of that's very important is when we look at it like this, what I like to do is I place these tools on one of my charts and then I keep it on there because I look at how price reacts to it in the future. So just look at that accuracy. We had 4 projection blocks exactly over there. There's 4 as well. You see how we created that zone over there. There we had the 3. And you can see to the right, created that beautiful area where price could be reacting off of. Okay, so we look at this one. This one was very nice. Just again, the theory that when price is pushing, expanding big in Asian session, looking at 0.5 increments. So 0.5, 1.5, and so on. And there we have it, price sold off. You can see time of day. There is London open. You can see, let's just break this down quickly. On the 5 minutes, created the previous high. We stripped the previous high. On the 1 minute, the break structure towards the downside. There's our order block, and there is your trade idea. So we see price reach the projection block, we react off of it. We don't need to get in there. We see price breakdown, breaking structure, breaking minor structure. We see price pull back into the order block, and that is then where you take your trade and let it run. So in this case, remember we are bullish. Well, I'm not sure if we were bullish on this trade, but it's frustrating when you lose yourself. Then obviously the main area for take profit that I used in a case like this is the Asian lows, but more on that in the next session. So that's just a practical way of how to use it. You can see this one as well. We were accumulating and then we just missed 2 projection blocks, shot towards the upside. In this case, wasn't as cumulative, it was more trending. You can see 0.5 again. And in this case, this one, big expansion day, we didn't stop. But also just a note, more on this in the individual lessons. This is a big overview. So don't fear and feel completely confused. More on this in the individual lessons, because if we have to unpack everything in this short session, we're going to take the whole day. And just noting here, we have 3 projection blocks, and then we move towards the upside. In this case, we see again the 1.5s, the one, because we see how we had impulsiveness in it. 1.5s, we rejected off it, went short. Big expansion in Asian session, and again 0.5, 1.5. This was a very nice one. This was a very good example of the accumulation Asian session. We will reach into 0.5 and then all the way up to 1.24. So in the more individual enhanced lessons, we'll be showing you how you can use this also for take profit levels. In this case, let's give this quick example. We have the order block to the left, so we combine it with a order block. We have previous lows there as well, and we had imbalance imbalance there as well. So we have order block, imbalance, previous lows. Combining that now with the projection blocks, 0.5, we get a pinpoint accuracy, the low of the day between 8 and 11. So there's 8, 10, 11. There's 11. Where's 11? There's 11. So there is our time period for the low of the day. We catch the low of the day. We get the accuracy of where to catch the low of the day, always combining it with liquidity points, order blocks, previous lows, with the projection block, and then take profits above. This example as well. Again, it was trending towards the upside, so ideally we would want to see price give us a clear order block. So if we were, let's do this as properly as possible. So this price is trending towards the upside. There's no clean or clear order block within this range. So there's nothing clear. So if we remember the in this profile, we want to see a clean order block, clean liquidity area in this area, but we're not seeing that over there. So there's not necessarily anything that we can take a trade off now, but we need to note the liquidity. So if we jump to the 1 hour, we note where's our liquidity? Well, in this area, our liquidity, we have an order block over there. Okay, so it could be reacting off of this one, but we also have a previous low over there. So where does all the confluences, all the things align with? Well, 0.5, it's expanding towards the upside. So you tell me, is it more likely to tap the order block or the 0.5 expansion block? Well, with this teaching is that it's more likely to tap the 0.5 than it is just this 1 hour order block. So there's liquidity. So you see how I align it with previous areas of liquidity. Price tends to come down, reach for that area, and we see price moving up. So as another thing that I wanted to say, because you can now say, oh, but it's not accurate and it didn't tap it. There's always a variance of 2 to 3 pips. So it's not going to be exactly, but now we have an area, we see price tapped into it, and we see the structure break towards the upside. This happens in the right time frame between 8 and 11. This is probably then the low of the day. What do? We take continuation buys going towards the upside. So now for you guys that love the 1 minute time frame, what do you look for? You look for buys from this point going forward. You look for all the buying opportunities on the lower time frame. Then you know the story, you know the narrative. We've created the low of the day. We can now take buys going up higher throughout the rest of the day. So that is it for now. I'm almost too afraid to ask if there's questions. Is there any questions?
I would honestly prefer to rewatch it before I question again, because it was a lot of information in one time.
Okay.
So yeah, I have questions, but I will keep it for me for the next week maybe.
Perfect.
Thanks.
Yeah, I think tomorrow you're also gonna have an overload of information. So yeah, it might be hard to digest. So just enjoy it right now, maybe think about it, formulate your questions, and then of course we're gonna have a Q&A session to answer them maybe next week. Alex, are you and you only use those projection blocks on the 15 minutes?
Yes.
Yes.
Yeah.
And then again, as he said, like sometimes you draw them from body to wick, from body to body, then from wick to wick. It depends. Like you have to play with it.
You have to see where the most confluence is. So if we use this one, the wicks. Where is the wick here? The wick over there. Then you can see it's much further away and there's nothing in there. But remember, I'm going to stress this every time. It's not the be all end all. It's not the main source for the salad. It's just something that you add to see if there's any confluences with it. If not, then you move on and you don't apply it. So if you look at the body closes, it's close to that area. So I would have used the body close, for instance, in this example. Okay. If there's no questions, we'll be almost wrapping it up. So the trade planning, looking for trades. So when we are bullish, we look for a discount liquidity point that aligns with no more than 3.5 projection blocks during London or New York session. So the reason I'm saying this is that if price is going to go for 4 projection blocks, it's most likely going to end up being close to the end of the day. And then ideally you would not want to take a trade so late in the day, because in the whole day it has spent reaching up for that level. And then you shouldn't be then looking for reversals at the end of the day. For day trades, if you're long-term trading, that's then up to you. But for how we trade for day trading, that is the rules that I have for myself. When we are bearish, we look for a premium liquidity point that aligns with no more than 3.5 projection blocks. We can then obviously use the lower time frame entry techniques after we've reacted from the projection block and just follow the order flow in the direction of the higher time frame analysis. When we are bullish, the next logical premium liquidity point will be the target, and when we are bearish, the next logical discount liquidity will be the target. So now I've made like a process tick box thing that this is how I personally use. So a few people asked me for my trading plan, and in short, this is my trading plan. So I start off the weekly. Where is the weekly liquidity? Where is the weekly reacting off of? Where is it going? Looking at the 20-day look back, highest high, lowest low. Where are we trading into? Identifying the trading range. Where are we? Are we premium or discount? Are we moving away from discount, or are we moving into deeper discount? The nearest 1H liquidity points. This is now our 1H liquidity, our 1H analysis and what's happening on the 1 hour, more for our day-to-day activities. We refine the liquidity zones on the lower time frame. So what those liquidity profiles, those liquidity combinations we've looked at in the beginning, we refine them on the lower time frame as well, as in examples that I've shown you. We look at the Asian profiles. Do we have the training session or the ranging session? If we have a training session, I know what to apply, look for. If we have ranging, I know what to look for. We're marking out the most recent structure breaking swing on the 50-minute and the 1 hour. So as I've shown you, we look at the impulse leg, the broke structure. You have to look at that for premium and discount, and we look for the tracements into that range. Identify the 15 and 5-minute POIs in the discount and premium. As we've shown, we look at, I use the projection blocks, apply those, see where everything is. I look at the high and low of creation, high and low of the day creation between 8 and 11 a.m. Also time of day, very important, session openings along with economic calendar, what is happening in the news. And then the Asian profile entries is always above or below the New York time, 6 a.m. the price to move down. And then things that I keep in mind and that I look out for. I want to see full body candles. I want to see a clean leg out of that full body candle that leaves behind imbalance. I want to see a strong structure break. We want to see liquidity accumulation and also time of day. So this is in a nutshell the process, how I trade. Maybe you identify and see this is not too far off of what you're currently doing, or this is completely new to you and you have no idea what to do with yourself now coming Monday. My best advice is rewatch this, continue trading how you're trading, and make notes on this, and then try to implement and see what of what I've shown you want to take for yourself and apply to your own trading as well. Lastly, just some nuggets for you guys and something that you can look for in your trading. I'm not going to spend much time on these 2 slides. I'm just going to be talking about this profile that often happens. So more on this also in the supplementary teaching. So just be patient about that and keep your questions for that. When we have a Asian session that's accumulating, we have price moving sideways. We have it between 20 and 30 pips. Everything is set up perfectly. We see price pull back into a 1 hour quarter block or sweep a 1 hour or a previous intraday low, maybe some imbalance over here, and we see we have an entry over there. Wonderful. Then we look for our next liquidity point. So maybe this was from the 50 minutes and we have the 50% over here, and we see then we have a 5-minute order block from the lower time frames up there. That is then where we take our profits. And then you'll see price just shoots towards the downside. And I know some of you have seen this happening on GU and EU, where we have Asian session and then price is just like erratic and then it moves in a direction. What's happening in here? It's actually very simple. Price is just accumulating orders, taking liquidity. It's taking the liquidity on the upside, it's taking liquidity on the downside before it moves in the right direction. And again, referring back to the weekly, that's why it's important to know where's the weekly drawn liquidity, because otherwise you'll be caught in the wrong side of this every single time. If you don't know the weekly direction is bullish, you'll miss out on this buy setup over here. You might see the sell and think, okay, we're selling, we're going towards the downside. And then you see this buy and it completely blows your mind. Why did I miss this? Because if you pay close attention, you see that we've reacted to 2 projection blocks. There was a nice order block on the higher time frame where we want to trade off of, and this perhaps have been a New York session, and we take the trade towards the upside. So that's what I want to say about it right now. This is something that you can look at on GU. Look at the Asian session and how price sweeps the liquidities on both sides before going in the right direction. And you'll see it happening quite often. The next one is a bit simpler as well. We are bullish. We are moving towards the upside in this example. This is the same for bearishness, but in this example, we're bullish. We're moving towards the upside, and then we see price tap into liquidity order block at 1 projection block above. So actually, you were waiting for price to manipulate towards the downside, as is shown in the first W course. We see the accumulation. We want to see the manipulation. We're looking for the initiation, structure break, change of character, order flow shift, and then look for the continuation towards the upside. But now price is first moving towards the upside. Now you're wondering, what did I miss? Is this now the manipulation? What is this just continuation? What's happening right now? You have to remember that we still have projection blocks below. Price can then still dump towards the downside into a higher time frame order blocks. This is important, the higher time frame order blocks. So you have to really be aware of your 1 hour. Do we have a 1H order block down here below all those liquidity? Because what's actually just happening is we're creating liquidity, we sweep then the highs, the lows, we have profile 4, we maybe have imbalance, an order block in here, perfect for us to return to. And if it aligns with 2 or 3 projection blocks, that's a good place to buy and see price moving towards the upside. So I know this might have been a lot and very fast, but rewatch it. And again, it's already an hour and a half. If I have to give all the information on this, we're never gonna make it. And that is it from me, guys. Thank you for listening. I hope you guys enjoyed it. I hope you're not too confused after this session. I would really appreciate your feedback on this, just for my self-validation that I do a good job. Do you guys understand it at least a bit?
I think it started really nice. Everybody was excited, and then we had the more complex stuff, and then we had the questions. But there we go. The feedback is incoming. Very, very, very nice. Very nice. And yes, again, guys, the vet is doing that stuff every single day. So if you monitor carefully his analysis and trades, then you would have seen those things. But right now, as they're shown in theory, then you're going to see him do those things every day. So that's what I said to Edlene. You might be confused right now, but you're going to be seeing it every day. So.
Hey guys, yes, you have to take your time. And this is something, because I've been doing this and practicing this for the past year. So it's natural for me to do now. I know how this can now feel like a new language that you have to learn, or a new way of doing things. But if you find you resonate with this, and this is something that you like doing it, then I would really suggest putting all your effort into it and really work hard and study hard to get to understand this better.
Exactly. And again, as he said, for example, me, I don't use all of those things, but I also utilize liquidity points, and I'm going to be also adding the projections as well, just to test them out. So as he said, just take whatever you like, put it in your own training plan, test some stuff, because for you, maybe the projections could just not work at all. Or maybe you struggle with, or maybe because he has like 7 profiles, maybe you just decide I'm going to look just for OBs, and that's fine. Never seen the very nice things. What is happening tomorrow? Really, John? Tomorrow I'm hosting a boot camp, and the vet had. I didn't know because we did it in Canva, which is like an online platform. I didn't know it had a limit of 100 slides. So I really went all in, and I've created like 60 slides or something. So the vet was really limited. I was surprised to what Bastinto central bank uses PBs. Oh well, we don't know if they do. Maybe they are. Maybe that's why it works nice. They make them. But yes, guys, so tomorrow, make sure to prepare yourself another hour and a half. I don't want to say 2 hours because we have a lot more slides tomorrow, and I'm going to be explaining a lot of stuff. So yeah, maybe you're confused right now. I hope tomorrow you're not going to be even more confused. But I think actually tomorrow is going to clean up a lot of things for you because yeah, it's been stuff that I've never recorded or shown, but I keep doing them again every day. And on the webinars as well, I've been explaining some stuff. But tomorrow we're going to actually put it into content and then into the mini lessons as the vet spoke about. Jimmy, this boot camp is only going to be 2 days this weekend. And because, yeah, we pretty much put everything together, just like as the vet said, as a big overview of everything. And then potentially we're going to put in more mini lessons, more examples and everything so that this can facilitate your learning. Does somebody know someone who knows someone who works in the market maker business? I don't know. Well, one of my professors used to be a market maker in the stock market, and he hates trading. So I don't know what's happening there. And yes, I see Izzy saying Divino. Divino is gonna host a. Is he there? That bastard. Where is he? Divino. No, he's not there. I'm gonna kick him right now. But yeah, he's gonna. we have to pray to him to make another boot camp on AU, because that guy's literally killing AU. He's also working a lot with lower time frames. So yeah. Okay, guys. Well, let's wrap it up for now. And I'm gonna right now render the recording, and I'm gonna immediately put it in the course. So in 1 or 2 hours time, you're gonna have it in the course, in the DW course, possibly in the new sections, bootcamp number 2, maybe. I'm gonna also share a reminder in Discord. So again, hope you enjoyed it, and chat with you tomorrow, guys.
Thank you, guys.
Thank you,
Thank
David.
you,
It was
bye.
a very nice presentation.
Thank you.
All right.
Thank you.
Bye.
Bye.